Hey guys, today we'll be talking about Tattooed Chef and the potential high growth that I think they have in the coming years. So, let's just start it off. I hope all your guys' New Year's were great and you're eager to start your New Year's resolutions. But today we're going to hopefully start 2021 off with a bang. We'll talk about Tattooed Chef. So, basically, just to get an overview of Tattooed Chef so everyone knows what they do and what's important towards them, I'm just going to briefly talk about this. So, Tattooed Chef is a company that has been penetrating the plant based meat and healthier alternatives industry through offering products like cauliflower pizza, acai bowls, cauliflower mac and cheese bowls, just to name a few to get the general sense of what they offer. Currently, they're really penetrating the frozen aisle with plans to grow into regular shelving in convenience stores and to international countries. What's really allowing them to grow as fast as they are is them offering convenient and great tasting foods that are healthier to comparable products and are at affordable prices, which is being highlighting as one of the main drivers within what allowing their success right now. So some recent highlights that I think are worth noting is that on October 31st, 2020, they announced their e-commerce website, which is going to allow a lot of people to be purchasing their products directly. This is actually really a really great move because when you have an e-commerce website, your margins are going to increase because there's less fees for transporting your products to stores and other facilities, and you don't have to worry about a lot of other retailers nickeling and diming you on your products. Another one is on December 1st, 2020. They had their Analyst Day, which gave a lot of useful insight on their growth strategy, how they're going to grow, how they're planning on expanding, and their financials. And a lot more. So if you guys are interested in looking at this presentation, I'll put a link to this presentation in the description. On December 8th, 2020, Tattooed Chef announced that their plant-based meat alternatives are going to be implemented into their products, and we all know how great the plant-based industry has been taking off with companies like Beyond Meat and the Impossible Food companies. So this is just great. So right now, Tattooed Chef is trading at about $22.89, and at the time of recording this video, there's also a couple multiples that I think are worth noting to show you guys the phase of the business cycle that they're in. So the two multiples that I've chosen that I think are important is the EV to revenue and EV to EBITDA multiples. Do you guys see like the discrepancy between these two multiples? Like there's about a 200 times difference, which I think is really important to note for this company and signifies that they're really not focused on the bottom line just yet, and they're really focused on the top line to make sure that they're really just growing their revenues right now for the future. So that's what's really important within this company right now. So just given that, knowing that they're really not focused on bottom line, this is why EV to EBITDA is so high. So understanding this, they're in the growth phase. Tattoo Chess has also taken a lot of locations, have most of their locations in Walmart, Sam's, Costco, and Target. So actually, a lot of their product innovation they've been doubling within the past 4 years, and they're also planning on doubling again or really growing their product line again in the future, which is going to allow them to penetrate a lot of different markets within the food and the frozen food aisle industry. So moving into the investment thesis, there are three main reasons why I think this company is set up for great growth in the future, with the three reasons being the healthier alternatives tailwinds, increased innovation, and a great balance sheet. So let's tackle the first point, healthier alternatives tailwind. What this point is really trying to hit home is that the millennials and Gen Z population is really driving the growth right now, and the health conscious mindset shouldn't really change. As if you're raised on a certain belief, it's really ingrained into you, and your thinking shouldn't really disappear and should actually grow as it gets passed on to your friends, family, and future generations. So within this industry, a lot of the top players are gonna have to adapt to these healthier alternatives. As this industry has a 10% CAGR, it's really going to force them to. And if they can't offer these great tasting alternatives, there's going to be turnover in the food industry, which is going to open up a huge opportunity for Tattooed Chefs if they're going to be able to gain this market share. So that point's really a long-term view, but these next 2 points is what's really going to drive the stock price in the short and medium term, which is product innovation and expansion, as well as a great balance sheet. So Tattooed Chef has almost been doubling their product offerings every year for the past 4 years, and is planning on growing it significantly again in 2021. So if they can keep this pace up in the future, it's really going to allow them to gain more space within the grocery stores and convenience stores and really grow their brand awareness and reputation, assuming that their products stay tasting really great, of course. So another thing that I think is really important to take note is within their balance sheet. So right now they have about $230 million of cash that's going to be coming into into their balance sheet, as they have about 20 million warrants that are going to be exercised at about $11.50, um, which is going to be great towards the balance sheet because there should be absolutely no risk of solvency in the future. And this company also has minimum debt, so an aggressive growth strategy is very doable as they're not held back through interest and principal payments. Lastly, within this point is a possibility of an M&A transaction in the future. So, if they get this $230 million of cash in their balance sheet, they're going to have to acquire. They're going to have to do something with this cash. So it's a great opportunity to be able to penetrate even more within this industry. But also caution you guys to pay very close attention to how this cash gets managed, because sometimes with management, when you have too much cash on hands, it's going to force management to do dumb things, such as take negative net present value investments. They're going to pay themselves heavy bonuses or be rushed into an M&A deal that maybe is not the best thing that they should acquire for their business. So there's a huge test for management's ability to properly manage the cash that they're going to get. So watch out and consider if you think how the board of directors acts with this cash for the future, if it's these transactions are going to be good or not. This thing that I also think is really important to take note is that the company really on the Analyst Day, they said for this product with the acai bowl, they sell about 5 units of this per week at a price of about $4.71 for a total revenue of about $23.63, which in a comparable product in terms of, it's beating their comparable products in terms of velocity and price, which is great as it's beating the competitors. But just to take a step back, I mean, this product's only selling five per week, right? And, that's less than a day. And it brings up a concern to me. It's like, why would they bring this information up? Now I want to know every other product that they have and how it compares to their competitors. It just raises some questions for me, and maybe I just thought you guys should consider it too, as to why they would only bring up this one product offering and not all the other products they have now. So I just thought that was worth noting. Moving into the comparable analysis, I've chosen to compare Maple Leaf Foods, Beyond Meat, and the Simply Good Food Company to Tattooed Chef. Now, when looking at Tattooed Chef and any growth company, it's fairly hard to find true comparable companies because their growth is backed by some type of characteristic that another company typically doesn't have, which is allowing them to grow so much. So take this analysis lightly, as these companies offer similar products through healthier trending foods and plant-based alternatives, but their overall companies are in different phases in their business cycle. So for example, Maple Leaf Foods offers plant-based meat alternatives and has their products in KFC and Harvey's, which is through their Lifelight brand. But their meat business segment is very mature, which kind of allows all their multiples to be fairly low when you look at the EV to revenue and EV to EBITDA. But aside from that, this just gives you guys like a gauge of what these companies could trade at different stages in their business cycle. So at a forward-looking EV to revenue and an EV to EBITDA has been chosen, you can see that through both multiples, there's an implied downside for Tattooed Chef, but it's driven through Maple Leaf Foods and Simply Good Food Companies weighing down the peer median. So the analysis has an implied downside of about 17% on an EV to revenue and a 55% on an EV to EBITDA multiples basis. Now, moving on to risks, there are a few things that I think are worth noting that would be important if you're a shareholder of Tattooed Chef. And the first one being dilution. So Tattooed Chef has about 20 million warrants that can be exercised at $11.50. So this means that Tattooed Chef will get 20 million shares times $11.50, which equates to about $230 million that can be added to their balance sheet. which is great. So there should be absolutely no issue with them running into solvency problems in the future. But it's kind of a double-edged sword because this means that the extra 20 million shares are going to be added to their shares outstanding, which is going to be putting a lot of downward pressure on the share price and kind of dilute our ownership within the company. So take note that there are only 20 million shares, so this is going to be doubling at some point. The second risk is that if their CCO, Sarah Galetti, starts to slow down on innovating products or they just don't taste good, as this is a company that's generating not a lot of profit right now, their capital appreciation is going to be coming through people recognizing that they're growing their presence in stores, their product innovation growth, and they have a good balance sheet. So if they find issues with innovating products, this isn't going to be good news for any shareholder. And lastly, we're in a low switching cost environment. If these products don't taste good, there is absolutely nothing stopping someone from buying another frozen pizza or frozen dinner. These products need to taste great, be competitively priced, and offer a healthy alternative to keep their advantage of running. So, just to give a quick recap, Tattooed Chef is a company that has been successfully penetrating the frozen aisle through convenient, tasty, plant based products with a bright horizon to enter international and other types of opportunities that will help them grow. They have a great balance sheet and a lot of confidence in their ability to take advantage of healthier alternative tailwinds, which should allow their stock to appreciate in the future. That being said, it's also important to understand the risks with this company, which is future dilution, low switching cost environment, and the chance that they stop innovating products. So I'll leave this up to you to decide if this is a company that you would like to add to your portfolio. Thanks, guys. I'll see you in the next video.